Good morning, good afternoon, or good evening, depending where you are on this wonderful planet. And welcome to the TGI. Thank God it's Friday, the 12th of September, Bull versus Bear webinar. Steve Miley here on the Call for Trader. Welcome, everyone. We're going to go through our usual regular run through here for Friday. We've taken a look at the calendar, what we've had, what we've got coming up. We'll take a look at the major news wires, take a look at some articles from those major news wires. What are the macroeconomic, fundamental, geopolitical, central bank events that are shaping financial markets right here, right now? And then we'll look at some of the charts and technical analysis and see what's going on in the markets going into today. So first of all, let's start with yesterday before we go ahead to today. So yesterday we had the CPI data. And as you can see in here, the core data and the headline data pretty much in line. So the core data on the month-to-month and year-on-year bang in line with expectations. The actual headline data actually slightly up on the month-on-month and expectations. So that's a slight negative. It's only a very, very slight negative in here. We also had some jobless claims data, which was a little higher than expected. So showing that potentially the initial jobless claims, where are we in here? 263 in here. So that's worse than expected. You see it's higher, so that's worse because it's jobless claimants. Yeah. So that data in there then indicated potentially that slowdown in the a weaker labour market and a potential slowdown going forward. So that adding to the potential for the Fed to move on rates next week, which we are anticipating. The market's very much priced in there, and potentially more aggressive rate cuts going into the end of the year. That's what's come onto the table over about the last 1 to 2 weeks, an expectation of a more aggressive Fed, a more dovish Fed, more rate cuts than we previously had priced in going into the end of the year and into next year. And therefore, that's seen as a positive for stock markets. So those stock averages hitting new all-time highs yesterday. Looking into today, excuse me, guys. We've had some European inflation data in here. You can see from Germany and France. Global inflation data is important to see how the whole world is getting on with its fight against inflation. See pretty much bang in line with expectations. Going into this afternoon, not too much. We do get the Michigan consumer sentiment and expectations data in here. Sometimes can move markets. Remember that's 10 o'clock Eastern, so a later data print for that. So we're watching out for that. Looking into next week, it's going to be all eyes on the Fed. And where are we? Tuesday, Wednesday next week with the outcome on Wednesday. So all eyes on the Fed going into next week. I'm just going to refresh this here because the morning briefing America not published yet. No, still not got it in here. But there's nothing really huge in here at the moment outside of that data we just looked at. Yeah, the morning briefing America in here still not showing on my list. So we'll move on there. But the headlines in here: Wall Street rallies as Fed gets all clear to cut. That's from that CPI data yesterday, and also the jobless data. US core CPI rises as expected, keeping Fed on track for a rate cut. Wall Street futures have eased slightly off overnight in here, but still on for strong weekly gains after the strong rise that we saw yesterday. Treasury yields near 2025 lows as more Fed easing is priced in. We mentioned that just now. We'll come and look at that in more in detail. Wall Street on the week ahead, investors seek Fed views on shaky labour market as rate cut looms. So it's going to be very much what they say as well. Very much priced in that we're expecting that rate cut, but are we going to get a lot more going into the end of the year? European stocks are slightly lower in here as healthcare stocks away, and the political situation in France continues to be high on the agenda. But overnight, Asian stocks actually followed US stocks higher, 9/10 up on the Nikkei and just over 1% up on the Hang Seng. As you say, European stocks have slipped, although the UK FTSE is up 0.3 this morning. But the German DAX down 0.3 and the French CAC nearly 0.5% with those political worries ongoing. And if we look at US stock indices overnight in here, it's hardly down really. Nasdaq actually unchanged and a tenth down on the S&P. Moving on to the Fed Watch tool. So this is now remember, this has seen a significant shift in here. I mentioned this at the beginning of this week we had a column over here which was to not change rates at the September meeting. Now that column has jumped onto this side, so now we've got a 100% chance pretty much we're going to get a rate cut, and a 7.5% chance that we actually get a 50 basis points. It's probably almost certainly not going to happen, but there's an outside chance of 50 basis points, and nothing here in this column here, which will be the unchanged column if there was a column there. So the market very much fully pricing in 100% chance of a rate cut next week. If we now go to going into October, what will we pricing in now? Well, only 11% chance we've only had one rate cut by October. So a second rate cut in here priced in, 89% chance of a second rate cut, and a 6.4% chance we're actually 75 basis points lower come October. So two rate cuts now priced in for the next two meetings, a rate cut for each of the next two meetings, September and October. And if we go to December now, and the chance of only having 50 basis points of these two together, so this is 18, basically 19% that we've only had 50 basis points down, and we've got 20% chance that we are 75 basis points, sorry, 80% chance that we have 75 basis points lower or more. So 6% chance we're 100 basis points lower, but 80% chance in here that we have a rate cut at each of the meetings from now through to the end of the year. So fully pricing in now, rate cut, 3 rate cuts by year end, and that's why the stock indices are liking that. And as we mentioned there about yields, you can see apart from the activity with that spike down to lower yields, and then a spike much higher to higher yields after the Liberation Day tariffs were put on, you can see we're effectively, this is the 10-year yield, we're effectively at the lowest yield point in here for this year, and the lowest point really since apart from that spike, we're only down there for one day since October of last year. So 11-month low in reality, really, on 10-year yields. So obviously across the board in here on our analysis, we're bullish across the board. You can see in here 30 years were breaking down. It's only a week and a half ago we were breaking down the real concerns about global bond yields going significantly to worrying levels. Remember, this is lower prices, higher yields here. So there were real concerns that global bond yields at the long end were starting to price in concerns about deficits, concerns about the global economy, and so we're seeing bonds selling off to higher yields. Now we have the 30-year long bonds surging higher prices, lower yields, and obviously 10-year as well. 5-year and 2-year all towards recent highs and remaining bullish in here, highlighting upside risk to prices, which is lower yields. And the stock indices obviously liking all of this. So bullish momentum after the CPI in here, markets turning back higher in here, not yet overbought on relatively short-term measures in here. So markets still got potential further upside going into the day. We've had that kind of pause overnight, and I would not be surprised to see markets adding on 0.5% to 1%, certainly 0.5% on to the gains we've already seen this week going into the end of the week. So, and the Nasdaq as well getting very, 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 very close to that all-time high up there at 24,068.50 in here. So that's the all-time high on the Nasdaq futures, getting closing in on that. I wouldn't be surprised to see us pushing up to and through that going into today and making a new all-time high potentially for the Nasdaq future. So yeah, really bullish in here at the moment. No reason to doubt that going forward. And we've only got that consumer sentiment data, that Michigan consumer sentiment data coming out at 10 o'clock Eastern. So markets are going to be just pulled, I think, with the momentum today. And I'm very much expecting higher prices. All right, guys, I'm going to wrap it up there. Fairly short webinar today. Not much really to say apart from that very positive outcome post-CPI data. Looking ahead to the Fed next week, that's going to be critical. I wish you all a great trading day, as I say. Going to wish you a great weekend as well. Until then, take care and stay safe.